Welcome to the Embedded Conference's OpinionMaker panel. I'm Zach Miller, Tearsheet's editor-in-chief. We don't do many panels at our conferences, but these OpinionMaker panels are a winner. We invite some of the smartest people in finance to join us to talk about important issues openly. Since we're talking about embedded finance, we'll talk about the evolving role of banks in today's embedded finance ecosystem. We'll also talk about how important it is to go global for today's leading financial brands, the rebundling of banking services, and big tech's competitive advantage when it comes to embedded finance. Today's OpinionMaker panel will be kicked off by Michael Fitzgerald, the head of corporate strategy at DriveWealth.
We had a really aspirational vision. We wanted to create a platform that would allow anybody in the world, anywhere, to invest any amount of money in any quality US security and virtually from any device. And we're very, very proud to say that we've accomplished that, that we now have over 50 partners where we're embedding investing experiences, and they've reached millions of customers across 150 countries. And we're incredibly grateful to be invited to this conference. Our belief about embedded finance, so for us, embedded investing, we really believe that's going to be the gateway to the retail investor, and frankly, the connective tissue that our B2C partners are using to connect the customer into their ecosystem. There's no question that investing is the stickiest and the most engaging financial services product. And so our partners are embedding our technology in our platform to take advantage of that. So thank you very much for having us.
Thanks for joining us, Michael. Dove, can you introduce yourself next?
Sure. Hi, everyone. I'm Dove Marmor, Chief Operating Officer for North America at Railsbank. Railsbank is a platform for prototyping, building, and scaling a variety of different financial use cases fully embedded in the customer's experience. So we do payments, banking, debit, cross-border payments, and I'm responsible for building our credit card as a service platform here in the US. Before this, I used to lead the banking as a service division at Green Dot, where we built the programs for Uber, Intuit, Stat, Wealthfront, and a bunch of others. And before that, I launched the US business of Currency Cloud, which is our current CEO's prior startups. This is our second round doing this together.
You just love embedded finance, though, huh?
It's funny. I think I first became aware of DriveWealth back in the Currency Cloud days. So you guys have come a long way. Really impressive story.
Thanks.
David, can you introduce yourself?
Sure. Thanks for having me on, by the way, Zach. Dave Donovan. I work for Publicis Sapient, and I lead our financial services practice at Publicis Sapient. Publicis Sapient is a digital consulting firm that leverages emerging technologies and pairs that with deep domain expertise in the financial services industry to help our clients reimagine their businesses to be successful in the future. We work with all the major banks, the major global banks, as well as the asset managers and intermediaries in finance.
Thanks for joining us, David. And thank you to Publicis Sapient for sponsoring the event. Paul?
Zach, how you doing, buddy?
Very good. Can you introduce yourself?
I sure can. By the way, man, that beard is unbelievable. If this thing doesn't work out, you got a job as the CEO of Twitter coming your way. So, hey, I'm Paul Diegelman, Vice President of Business Development and Partnerships for Fiserv, and my area focuses on data aggregation and embedding our capabilities in a variety of fintech and other platforms in the US. So happy to be here, and David, nice to see you again too, buddy.
Yeah, nice to see you too, Paul, as always.
I'm a little overwhelmed. I've got like 4 really good looking men here, and I've spent the past 2 days like with 10 hours of one-on-one fireside chats. I don't know what to do with all the energy, but I basically came up with 4 questions. I shared them with you guys beforehand. I know you each come from different organizations, different perspectives on these topics. So I thought I tried to pick something that would be interesting and diverse. Let's start with Paul, since you introduced yourself last. First question is, embedded finance changes the relationships banks have within their ecosystems. What do you see as the changing role of banks in the future?
So I think Fiserv comes at this from an interesting perspective, right? We are a significant portion of the infrastructure for banking and financial services in the US and in different parts of the world with the thousands of banks that we serve. And our opinion is that banks have done a heck of a job bundling a series of functions and products together there's one bank login to see your money at this bank or other banks, or, do some wealth management, as Michael pointed out, or send Zelle payments or pay your bills, like all of that. But in this emerging open banking and embedded finance era, there is likely an unbundling that is underway and that is coming, that is breaking down these products that have been bundled together into API accessible functions or data, as well as providing different methods of access, different surfaces, or ways to get at this information. Like this week, the Google Pay integration with Stanford Credit Union is a great example, or you see Amazon is bundling in loans. Like I think they're great examples of an unbundling and an embedding that's underway. And earlier in the week, we had Terry Angelos on Avisa, and he said something that I thought was really interesting, which was that community banks differentiated themselves by embedding in a community and serving the needs of that discrete group. And I think the question that comes for a lot of banks now is, will they differentiate themselves by learning about some discrete digital community or group and embedding themselves into that in the same way that they embedded themselves into a physical community right down the street? So I think these are some of the things that are changing and that are underway from our perspective.
Yeah, very interesting. And Dave, I know you work with some of the world's biggest banks. Like, how do you see this playing out about the evolving role of banks?
Well, I think, first of all, embedded finance is a business opportunity for any brand, regardless of domain. And so for banks, that's an opportunity for them to grow. If you look at the banking industry right now, very muted revenue growth, very much tied to some things that are out of their control, like interest rates, for example. Mm-hmm. And so if I was a bank executive and I was, at the end of the day, part of their remit is to grow revenue. And this is a great opportunity, because their clients, as well as new clients, the expectation and the experience that all of these consumers are looking for, from interacting with technology companies, is an expectation they want from all the brands. And so to me, it's an opportunity. I mean, I think people think about banking when they're doing other things, like going on vacation or shopping or going out to dinner with friends, but they also want a seamless experience. And so for me, I mean, just personally, I find, it's sticky. Anytime you don't have to reach into your pocket for your credit card or for money, that's an amazing experience. And so, for me, it's almost like, for banks, it's table stakes, as well as it's really a systemic change in all business models.
Got it. And Dove, you've seen this from a few different perspectives in your career. Where do you see banking going headed in the future?
Yeah, to me, it's a massive opportunity for partnership. I view this as just what is the fastest point from A to B. So a bank wants to obtain consumers. Best place to find consumers is where they spend most of their day. And today we spend most of our day on our smartphone in the apps that we love, right? So no one's coming in off the street to open up a bank account anymore. They are going through, big kind of recommendation platforms, but they're charging $500-600 a lead to get in the bank's door. There's a huge opportunity that we see in terms of allowing the tech companies and the fintechs and the brands to place financial services inside of their ecosystems. And those companies are still going to bank with the banks. We still want to partner with the banks for underwriting and risk and credit and all the things that banks do really well. I view us as just an amazing partner with them for them to reach tremendous scale and access new customers and new consumers and markets that they otherwise wouldn't have access to. Like the example I always look at is I love Alaska Airlines, favorite thing in the world. Their credit card, why doesn't the experience live in my Alaska Airlines app? It doesn't make any sense. So the technology exists today, and we can power a bank to kind of win that business because we can put that experience in that app, partner, make it fully embedded, and can kind of make it part of that overall experience. That's awesome. Where I see it in the future.
I see that. And Michael, I guess you partner with a lot of these newer banking brands all over the world. Like, where do you see the role of banking evolving to?
Yeah, Zach, it is interesting because, we do partner with digital players or rebundlers, as we think of them, that are offering banking services like Square with their Cash App here in the US, or Revolut across Europe and globally, and Moneyline and firms like that. And so, what these companies are, these digital neobanks and challengers, is they're really customer experience companies. and they have found niches where they really feed towards the consumer's demand for convenience and always on and always available and very retail friendly experiences. And so, but they also want to have very little infrastructure. They don't want to rebuild a bank. They don't want to rebuild a brokerage infrastructure. So this concept of being a customer experience on the front end and light infrastructure on the back end really kind of show, at least to me, banks are going to really need to, there'll be some global banks that want to compete head on for that customer experience. And as Paul said, kind of embed themselves in a different way into these customer lives. But a lot of banks will kind of go back a little bit, partner with these digital leaders, let them control the customer experience, where banks play roles that these challenger banks don't want. They don't want to be the trusted custodian necessarily, or be the front line on all the regulatory aspects of it. Those are, or manage risk directly. And so there are definitely a lot of opportunities emerging on how banks will embed themselves in the digital world. But I think you'll see a bifurcation. And Google's announcement yesterday, Googleplex, it really kind of amplifies that they're going to control what they're really good at, which is an incredible customer experience, and look to these banks, both credit unions and regional banks and global banks, for all the core banking infrastructure.
The next question I'm going to put out, I'm not going to call on you guys individually. I know you guys can share your toys and get along well. So just hop in if you have an answer. But we heard from a few of the platforms that they actually started, whether they intended to or it was by accident, they started out focused on going international from the beginning, being global. How important is that nowadays for fintech companies, startups, for banks or new competitors in the space to be thinking about being international?
Well, let me start if I could, because I think that when we initially launched DriveWealth, as part of our core initial vision was to be a global partner and provider, and looking to enable, as I said, anyone anywhere to get access to frictionless investing in the U.S. And so it was part of our DNA when we started. It really shaped how we hired personnel and how we built the platform. In heavily regulated industries like brokerage and banking, going global is hard. It is hard. It takes a long time. Every country has rules that are a little different than another country. And so I think, but on the flip side, it's not very well known, but right now with all of our growth, still 80% of our customer assets are from customers outside the United States. And so we believe that the embedded investing product globally is just massive opportunity. But if you haven't initially built your infrastructure to be global, I sure as heck would recommend partnering with a modern infrastructure provider or a modern banking infrastructure provider like DriveWealth or the folks on the panel who have done that already, because it takes a long time. It's very expensive, and there are a lot of areas where you can go off, go off the fairway.
I'm going to jump in. I think to Michael's point, different countries require different resourcing, relationships, regulatory know-how. Like there's a lot that you need to know that has to sit on top of that sort of infrastructure. So if I were starting up or investing in a firm, I'd like to see them do one thing really well before they start doing the next thing really well. That's just my opinion.
I'll jump in next. So basically, I'm going to throw the customer lens on here. So we're all B2B platforms, right? And most companies of significant size have global ambition. And one of the things is once you've built their awesome banking or debit or credit card program in the US, they're going to say, well, I also have businesses in Europe and Asia, and I want to launch it there as well. And if you didn't start with that thought in mind, you ultimately end up telling that company, sorry, and they have to go literally build an entirely new product in every new country in which they operate. So when Railsbank was started, it was actually started with the vision of being a global platform, which is always funny because initially, we were a global platform that only operated in the UK, but now it's actually truly on 4 continents. But ultimately, the vision is a single set of APIs that is completely dumbed down to the most standard level: open account, send money, receive money, check transactions, set PIN. Those APIs that are facing the customer are going to work exactly the same no matter where you are in the world. And then the concept of Rails was, let us plug each one of those pieces of functionality into the specific banking or processing rail that exists within that country so that the product can operate, right? So to the tech company, here's a set of APIs, off to the races, have fun. to us, we're building all that complexity on the back end, and it is really complex. But there's a lot of value in that, right? And that's what makes us unique.
And Dave,
I would just add that being global is, as some of my colleagues have already mentioned, it's really tough. But I also think that's why I believe that this is domain agnostic, and that's why embedded finance is so important. It's almost like it's going to be part of the stack going forward. And any brand could be a financial services company if you think about it. I mean, they don't even have to charge margin on their existing product suite, and that's why I feel like big tech has a very big advantage there. You look at somebody like a Facebook, for example. I mean, they can do business in India, and as great as JP Morgan is, and we all know it's an amazing franchise. Can they have the penetration in a place like India or Brazil as Facebook could or Amazon? I think it's going to be challenging. So, but it will also be exciting. I
want to switch gears to the next question. And one of the themes we've heard in this conference, and actually in our last conference as well, the Challenger Banking Conference, is sort of this theme of unbundling the bank, and then the reverse, the rebundling, which it seems that we're going through now. It seems also a lot of the platforms started similar, like a monoline type offering, and now have expanded into other things. Do you guys see that happening at the platform level as well? Sort of this platforms that start with a focus, or either in a product or in a customer, and then being able to expand and move laterally. What do you guys think about that?
I mean, for me, I feel like it's going to be an ingredient. I think it's going to be part of the platform. Really difficult to stand alone, I think. And you've seen that with the challenger banks. So in my view, fintech will be more part of a larger platform or ecosystem. And that's why I feel like, the term embedded finance is exactly what it means.
From a platform level on our side, like unbundling happens at so many different levels. So like what's interesting about, an onboarding flow can be unbundled into 5 or 6 different API calls. And you have to have enough experience to know separate first name from last name, because if someone gets married, now you're screwed. You can't change the two, right? So there's unbundling of the specific API calls that give the developers on the tech side a lot of flexibility in terms of the types of experiences that they can create. So that's one area that unbundling has become huge. And then you rebundle it into an instruction manual, right? So one of the things we're doing right now is we're basically building, I compare it to my kids like Lego sets, where I get an instruction manual and a bunch of pieces, and by the end I have a rocket ship. And exactly that same concept. Let me show you an onboarding flow that's compliant, and then let me break it down into the individual APIs that were constructed together to create that onboarding flow. If we create that level of standardization, it allows companies that are new to credit cards or debit cards, whatever that is, build that experience inside their app and not have 4 years of back and forth because they didn't know what they were doing in the first place. So that's one of the areas that, we unbundle and then rebundle to kind of create that enhanced service. And then like any company, you can't do everything at once. So you just kind of look to the market, look to the customers, find the biggest pain point. Right now we think in the US, it's every company with a debit card wants to launch a credit card next. So we'll start with that and then expand to the other product sets as well. But yeah, you have to start somewhere, and then you'll grow over time from customer demand.
Yeah, like Doug just said, from our perspective, we think any sort of expansion will be gradual and just won't be immediate. I guess from our perspective, when our partners embed DriveWealth's platform into their app, the next thing they want to do is they want to put as many financial products through that pipe that they think would resonate with their customers. And so what we're doing is continuing to broaden out our product set that we can serve up to our partners that could resonate with their customers. And so this year we added digital retirement accounts and mutual funds and products for HSA related companies. And I think if you look at us next year, you'll see us continue to kind of build out that platform of different product sets we can enable. So over time we'll become much broader, but I don't think it's going to be overnight. I mean, these are our partners are not shy in sharing with us what they want from us, and so we spend a lot of time trying to prioritize product roadmaps, both from what we think is going to resonate with our partners and what we think we can be the best at.
I think Dov and Michael really hit it on the head around customers and partners and consumers, right? Like we've seen the massive shift in behavior in the last 6 months because of this pandemic that we're not even out of yet. there's no reason to believe that acceleration of digital transformation is going to slow down. Like people are paying bills differently, they're sending money differently, they're interacting with their wealth differently. And I think the platforms underneath have to be prepared for how behavior will change either at the partner or the consumer level going forward.
So I agree with all of you, but I can't help but feel like we've seen this movie before. And I think one of the issue that I'm taking to heart is, the movement 20 years ago to become a global bank, right? Like these brands that moved everywhere, and then they became, jack of all trades, masters of none. I can see platforms also expanding very, very broadly. And then a new startup comes, says, well, I'm going to take a little piece of that again. I will unbundle, and I'll do it way better than you guys can because you spread too far. I feel like that has the possibility of happening here again. Am I off on that?
Well, it certainly has the possibility. But one of the things, at least as we think about it, as an infrastructure provider, we don't have the benefit of moving fast and breaking things. We have to, our partners outsource all the brokerage weight to us because they trust that we'll be industrial grade. And if we move to another product or move an extension, we damn well better be industrial grade, or we will upset the entire relationship. And so where I think some of the B2C companies have a little, they can introduce and pull back products a little more aggressively than I think we as infrastructure providers would be in our best interest. At least that's how I think about it.
Good point.
Another big chunk of it is just, I think there's been a lot of learnings of how companies have gone about that in the past. So you can't just take a UK app for the UK market and think it's going to work in the US, because the local set, the demands of the customers, the features, they could be completely different, especially at the platform level, right? There's different ecosystems, different payment rails, all those different pieces. So one of the things that we've learned through that process is you actually have to hire local market teams and empower them to localize the product in each region with a global overlay. So this idea of a single set of APIs that works anywhere in the world, the customer cares about that. But you absolutely have to localize so many of the different processes in every market that you go to, or it just doesn't work. So I think that's where a lot of others failed, is they just took their original product and hired a sales team, right? And said, go sell this. That doesn't work. But if you truly localize a global product to each market, then you actually have a far better chance of accomplishing what you set out to do.
I want to switch gears because I think each one of you has mentioned big tech in one way or another, and it's definitely a theme we've heard throughout the conference. You had Google's announcement this morning. What role do you guys see that big tech what's its competitive advantage going forward? And what do you guys expect to see from some of these massive platforms, non-financial platforms, moving into the financial space?
So I'll start if that's okay. I think they definitely have an opportunity, right? Big tech often runs the surfaces in the UX where this whole notion of embedded finance would be embedded in the first place, right? Like we spend part of our day in Google right now. We spend some of our day in Amazon. So the notion of getting other financial capabilities in those places as examples it's highly likely. And at Fiserv, we talk about the speed of life, right? We're all super busy. We all have a million things we're trying to get done. If we can get more than one thing done at the same time, to keep up with the things we need to do, embedded finance is a way of doing it. And this stuff is embedded in the places that tech is already in our lives.
I think big tech just kind of noticed like, oh, hey, consumers actually want this. And hey, we already have millions of consumers. And originally they were like, well, they had no desire to go build out a banking infrastructure. But BaaS and kind of all these different concepts made it really easy for them to go build their own embedded products. I think the other kind of piece that we'll probably see in the future is that a lot of these apps have just done such a fantastic job crafting these incredible user experiences. I think you'll just start to see tech buy some of those companies, right? Because that just puts them 5 years down the road into a great product, and you can embed it into other areas of the ecosystem and kind of create new things. So I'm actually surprised we haven't seen as much of that yet. It might be the billion-dollar price tags on each one of these companies, but it definitely makes sense. And I think we'll start to see a little bit of that coming up in the future.
For me, I feel like there's two points I'd want to make. I think big tech sees an opportunity, and they also are protecting their existing franchise because of the brokenness in some of the workflow and some of the legacy banks, that threatens their experience. And so I feel like in some ways That's why they wanted to get involved in embedded finance. Plus, they also see an area of disruption. I think what would be great is if, I actually think this will happen, is that you'll see a much better partnership between the big banks and technology. But if you think about it, big tech is scary in some ways, because let's just take swipe fees, for example. They could essentially offer they could offer that for free and just get the data, right? To power their other businesses. So they could be very disruptive if they wanted to.
Interesting. Lost leader.
So, to that point, David, as we talk, we think about big tech, I think a thing that really started to roll out in the last few months is, can we trust these platforms the way we can trust our financial services provider? I mean, you see a lot of this now, Senate hearings, this concern about the sharing of data, whether appropriate or inappropriate. Like, there's a trust factor that banks often have with their consumers. And maybe a bank doesn't have the cleanest surface and UX and the best experience, but they often have trust. And I think that is a foundational piece of how people want to interact with their money.
I think that's a good point. I think trust is a big part of it. And I think that's what banks need to leverage. I do think it's a little bit, it cuts across demographics. I think young people trust technology companies because they're grown up with them. But for sure, I mean, and that's why I think a partnership makes sense. I mean, I think having a traditional financial services, big tech partnership would be perfect for the consumer, as well as for both business models.
I guess from DriveWealth's perspective, when we designed and launched DriveWealth, it really was with the expectation that big tech was going to be a huge player here. And, our goal was to build a global, massively scalable brokerage infrastructure to enable, big tech to scale. I mean, they're incredible customer experience companies. They're incredible brands. They're brands that get customers very young in life, way before kids are thinking about, banking products. They know Google, they're on YouTube, they have an iPhone, what have you. And so, we're really excited about the next phase from the big tech, and not just the FANG US big tech, global big tech. Ant Financial and Tencent and global players like that have such massive customer bases. They are going to be huge players here, and that's what we built ourselves for. So we're really excited to hopefully play a role in that rollout.
I want to ask you in a very succinct way, what brand would you bank with if you're given the opportunity, and why?
Instagram, because I'm there all day.
Are you really, Paul?
I love Instagram.
Okay.
It's not what I was expecting from you, Paul.
I didn't expect that either. Okay, Instagram. Owned by Facebook, of course. Okay.
Back to trust, right?
Yeah. Yeah, I think Facebook has a really dominant platform. I mean, I like WhatsApp, because of the encryption ability, but I know I agree with Paul. Instagram is going to be formidable.
Interesting.
I think I would bank with Apple. Just love the user experience, embedded piece of it. It's funny, like when I got my Apple card, I got it because of the metal card, which is so stupid, but it worked. And then I never thought I'd really use it. And I use it all the time because any website I'm on my iPhone, if I use Safari, automatically just pre-populates my Apple Card info. So even though it's worse points on my other card, I'm just like lazy and I just do it anyway. And like, that's the value of the embedded experience. You take one step out of the process of me taking my wallet and pulling out my credit card because I can't remember the CVV. They just solved that. And my kid's tuition is on there. Like, I mean, they get big payments out of me. And I never thought I would use it, but it was amazing. So that is what tech companies kind of bring to the game, is if you embed financial services to make the journey one step easier, it works. And you don't have to, like, it wasn't about the rewards. It was just about making my life easier.
I definitely feel the East Coast, West Coast rift here.
Well, I'll break that because
sitting outside right now at 90-degree weather. So what can I say?
I am now a much more active Square Cash App customer than I was in any sort of traditional bank, and I think what they've done is terrific. I'm really fascinated to see over the long term what Google can create. I mean, they've just come out with such powerful products in the past. I'm really curious about over the long term, what they enable with all the data they have on us. And so I never would I mean, Apple's obviously one of the great companies, but I would never undersell Google and what they can create.
I want to hear from each one of you, and I think we'll probably end with this. So take 2 minutes to answer this question. What's the most exciting opportunity each one of you has in your businesses?
May I go first?
Paul always goes first, Paul.
So,
as long as you get the check.
Yeah, I'll take the check. So the business that I'm in is the collection of consumer permission data and the sharing of it where consumers want, so that they can make their financial experiences easier, whether it's wealth management or making payments or paying bills. And I think the most interesting thing in the space is that so many use cases that we haven't even thought of yet, right? Because consumers are the ones that are identifying how does the sharing of their permission financial data make their lives easier. And so they're coming up with things once or twice a week, a new use case arrives that candidly we never even thought of. And so we're constantly chasing after, wow, that's clever. How do we support that? How big is that? How many people want to do that? And so for what we do with the sharing of financial data, that to me is what's next, is this massive array of things that we can do.
I'll tell you from DriveWealth's perspective, the thing that we're most excited about is the global explosion of B2C digital companies with tons of customers. When we started this, you had Ants and Tencent and that, but now every country has, digital wallet, neobanks, telcos. We talk about big tech, the telcos, the wireless companies have tens of millions of customers, and you have the global brands. And as David said earlier, I think it was David, anybody can be a fintech company. And the fact that now, whether it's in Africa or Indonesia or India, you have B2C partners that have digital relationships with 10 to 300 million customers. That wasn't there when we started, or at least wasn't there in every country. And so that's really, really exciting to us.
So I'll go next. I mean, the biggest opportunity is one that's right in front of us. So the $4 trillion US credit card market and $1 billion of that in co-brands. I think that, the white labeled co-brand app is like the typewriter of the financial services industry. It hasn't changed in God knows how many years. So it's really complex to build that embedded experience. It's really complex to unbundle all those pieces so that tech companies can actually create their own UX the same way that you saw in payments and debit in the past. So I'm really excited to see what type of experiences and how they can change credit and embed that in all the different areas of our life. I think that's kind of the next big, huge, massive opportunity that the market's gonna see. And frankly, beyond that, anyone's guess.
So for me, I feel like this is a really exciting time, and for me, having just even a small opportunity to work with our clients and some of these iconic brands in creating this invisible fabric around their clients and the consumers, in helping them create financial wellness. And I believe that if we can, even achieve a small part of that, then if people are financially well, then that leads to a good life. And I think that's the opportunity, and the innovations out there to really take down the anxiety level, so to speak, of all of us.
So you guys didn't take your full 2 minutes, which I'm surprised, because none of you are short on good explanations. Who's the biggest winner in this entire sort of move towards embedded finance?
Well, for sure, the customer. I mean, 100%. That's across the internet, right? That so much of the value goes directly to the customer, and you can see the scale of some of these customers that have taken on one overdraft protection. You don't get. It was hard to appreciate how much pain that created until you saw an aggregate of 15 million customers changing banks or adding banks just to get overdraft protection. And so, and this is going to go across every financial product, whether it's student loans or what have you. So, at least in the U.S., there's a lot of different forms of payment and the like, and it's fairly easy to pay for things online. but globally, globally where that, they don't get access to any sort of, high quality retail products. And now through their mobile device, they can buy any amount of Amazon, without any friction. I mean, that's that the consumer is, which is, going to David's point that it's, it's just, that's just a societal benefit that technology, like the partners on this panel have created, have just enabled these global products to be distributed at embedded micro levels. And that's really powerful stuff to us.
I think equally the consumer 100%, but equally the entrepreneur, both whether it's an entrepreneur in a big company or an entrepreneur starting their own company. But until now, you saw a disruption you just saw at least technology innovation in every industry. You saw it in retail, you saw it in travel, you've seen it all across the board. The banking space was the last one to see it because it's so damn hard, right? Yeah. But now that we've kind of simplified it and kind of built I call it like contract manufacturing of financial products, right? You kind of have, you're 80% of the way there. You just have to build the last 20. The real beneficiaries of that are any company that's envisioned financial services as part of its product suite that keeps customers more engaged in their platform and is able to provide more benefits. To me, they're equally the beneficiaries of this whole thing.
What does my banking relationship look like 10 years from now?
I think it's going to be through a big tech company, most likely, or to me, honestly, the ones I really love are these apps that are putting together invest banking and soon to be adding credit card. I mean, like if you literally put all my day-to-day financial services in one place, like I have so many points on Amex that I just don't use, especially post-COVID. If I just had been investing those into Apple stock the whole way, or if I had just kind of like done something smart with my points and had that automated, I mean, that's a game changer. And to me, that's going to be the exciting place that I think most of the young people are going to start getting on board nice and early, and they'll be there for a long time.
Yeah, I would just add, and Zach, I know you know this because I've used this example before, but I have Acorns, which is the micro investing app on my phone, and I have this really cool example that happened where I got an email from Acorns, and it essentially said, Nike is going to give 10% back on any product that you buy today. And there was just one little green button to push. And so, I clicked the button, it takes me right into the Nike e-commerce website. I needed a pair of sneakers for the gym. So I scanned all the sneakers. I found a pair that I liked for $150. I click on it. Again, no credit card, no nothing. Click on it. Everything's seamless, the seamless workflow. It's going to be delivered in, 5 days. And then all of a sudden I got an email that Nike has kicked back $15 into my Acorns investment account. And, as that ecosystem gets built out, and they have they have partnerships with so many different brands. But I mean, that's the power of what embedded finance can do, and innovation, and that's going to create, just as Michael said, just a better experience for consumers.
Yeah, I mean,
I think love that experience. So one way they could build on it is like, instead of giving us like a couple % cash back, like let me pick my amount. Hey, you just bought Nike. You want to donate the same 150 into Nike stock? Like, I think that's going to be the next level of innovation. Is every time I spend, I also invest in myself, and like that's when the real scalability happens, because 2% is only ever going to go that far.
Yeah, good point.
Yeah, the whole concept of cashback, I think, will be rethought, because that goes right out of the ecosystem. And if you can incent and give loyalty rewards back to your customers for paying back their loan on time, or paying back their credit card, or you just build it into the price, and yet you're starting to build a little bit of an asset and a reason for people to keep coming back to your ecosystem. And so, but I do think that customers have gotten now used to the always on, always convenient type of banking services and investing services that have been enabled. So you think about what's banking going to be like in 10 years. I do think it's going to be a little more like, automated driving, right? Where you really, there's so much data about the customer and what they do and what they want, stuff like that. It's all being pulled together to allow the machine to drive without a lot of customer intake, and do it in a safe way. I think that's, banking will happen across all different types of products. but it will do it in a much more automated way than it is today, even today.
Guys, I feel like I could talk to you forever. This has been really, really fun, really, really enjoyable. And thank you all for participating in the conference and sharing your perspectives.
Thanks,
Great.
Zach.
Thank you, Zach. It's been great. Thanks, everyone.
Thanks, everyone.